Yeah. All right. So, hey, whoa, I'm back, and well, I haven't posted in like I think it's like 4 months or something, 5 months. Um, I was in South Africa. I'm in Florida now. I had to move across a couple continents, but the GameStop short squeeze is what made me come back on right now, and I think I'm gonna have to make like 20 videos now because there's a lot of important stuff happening. But I just want to explain like a couple of fundamental things that this short squeeze situation has presented that like almost nobody gets, and it's incredibly important to understand the actual fundamentals of stocks. Like people have been saying like, oh, okay, the stock's like, disconnected from the fundamentals just for a minute here because things are weird or like wrong. Like people just like the fundamentals are just different than everyone thinks they are. And this short squeeze, like the entire theory of why it works and how it works is like completely based on the actual fundamentals that actually work. Um, and it's also like just kind of a wild thing because it's like a grassroots like counterattack to, you know, the big industry manipulation of the markets. So, I mean, like there's a lot of things like, the big banks like holding down like gold and silver that everyone kind of complains about, and like you can't do anything about it. But something like this, it's like okay, like a little tiny stock that's like overly shorted. Like, wait a second, if you get the fundamentals, you can do something about it. So like this short squeeze uh, is something, and it's like a threat to. Well, I mean, it's a threat to hedge funds that have short positions, basically. But it's just really a bunch of people, like a bunch of young people with stimulus checks that just wanna, gamble. I guess kind of is like where it's coming from, but it's like a thesis from uh, Wall Street Bets on Reddit. Like a couple of users came up with this idea that you can, you know, the GameStop is it's sort of like a defunct video game company that doesn't make sense anymore. That used to be in the mall. That's like looks like it's gonna go out of business. Has a terrible business model. Blah blah blah. So there's a ton of short pressure on it. But the short pressure got to the point where it's like the shorts are a higher percentage than the actual like tradable shares, where the it doesn't even make sense. Like the shorts on this company are absurd to where they don't even make sense. Uh, so yeah, the Wall Street Bets, this like online Reddit forum is like, well, like this, nobody nobody here like would want to invest in this company, but there's these huge hedge funds that are shorting this stock because of these basic fundamentals, but like the fundamentals just straight up don't work like that. And we're gonna prove it. We're gonna prove it by getting a ton of people to go long on this thing and buy call options and short squeeze it, and that's what's happening this week. Um, and it's going crazy. So today is what, Wednesday night. The short squeeze is, well, it's already out of control because I mean it was at for the last like 4 months, GameStop was like $8 a share, and it popped to like 12, and it popped to 80, and then it popped to like 350 or something today, and now, I mean, Elon Musk is coming on the channel, and he's saying like game stonks, and I mean, Fox News covered this today, like, um, it's like going out of control, just talking about this, this short squeeze that's happening. But I haven't heard very many people explain like actually how it works or like why it's happening, which is the important point. Uh, hopefully, for anyone that wants to to understand like how stocks work, like this is how it actually works. So yeah, like the reason that this short squeeze, well, I guess like mathematically you can get into like the short exposure and people have to like cover their shorts if you squeeze it, blah 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 blah. But the big point is that everyone like since the little pullback, the crash, the run up, like everyone's saying like, okay, the stocks are like disconnected with, you know, the fundamentals, where there's this idea that the profit and the business model of the company directly contributes to the stock price. And that's just not true. It's just straight up not true. And it has not been true for a very long time, like probably like 80 years. That has not been true. So like this short squeeze, it's not only like a theory on, I guess, stock fundamentals. It's like also like an attack against sort of establishment and everything that's like kind of going on now. It's sort of like the little guy like taking a step back. So it's like a really interesting thing. But yeah, I guess I wanted to do this video just to sort of check in on the stock fundamentals that actually happen. Like, how does it actually work? Because it's really important. I don't know, alright, let me just like cover it kind of, and then I'll just do like a little story time, I guess. So, basically how a stock works in this century is the stock, like the company issues shares, and then you pay them for the shares, and they keep the money, and then you have a share. And after that point, like, what they do with their business has absolutely nothing to do with your shares of the stock. Like, the shares of that company and the actual business of the company have zero relation with each other at all. Like, the only relation that those shares have with the company is that the initial person that buys the share gives the company money. That's it. The company keeps that money. And then after that, the only way that you can make money off of the shares is to trade them to somebody else. And that's it. Like, the profit and loss of the company has nothing to do with the share price. The business model of the company has nothing to do with the share price. The company sells you the shares, and then you can trade those shares to someone else. That's it. Like, the only way you can make money is to sell the share to someone else. It has no relation to the company. The only relation that your shares have to the company are, well, if the company has dividends, then their profit numbers, they will give you a percentage. And they're not required to. Like, if their company starts crashing, they can stop issuing dividends. So, like, dividends are a short-term thing that they do right now, and they don't have to do them in the future. So, like, the idea that a dividend stock is sort of safe or fundamentally whatever is wrong. It's just not correct. A dividend stock, if the stock market crashes, they won't pay you a dividend, and they can disappear, and you lose everything. But yeah, I guess that's the two fundamentals that are super important. Is when you buy a share from the company, you give the company money and they give you a stock, which is a piece of paper that you can trade to other people, and the company never owes you money back for that ever. Like, the legal contract is like the company owes 0.001 cent or something, like way less than 1 penny. Like, that's what they owe you back, and you can trade it to someone else. And then the other fundamental, I guess the important fundamental where it actually does correlate, is this. Like, if the company stops existing, like, not just bankruptcy, because, like, you can go into bankruptcy, like, Chapter 7 or 13, you can restructure, and you could get a bailout, something. There's a lot of, like, the company almost goes away, but doesn't, where the stockholders, like, still exist. But if the company actually goes away, not only does your stock go to zero, but it just stops existing. So, like, that's the only fundamental connection that your stocks actually have with the company. After you've bought the stock from the company, you've given the company your money, they keep it. You have a piece of paper that you can trade to other people. And then the only connection after that point that you have at all with the company, at all, has no connection with anything the company is doing, is if the company stops existing, your stock stops existing. It's worthless. That's it. Like, that's how it actually works. And so I think almost nobody realizes that. And it's I don't know. I've heard a lot of people calling stocks like a Ponzi asset or like a scam or something like that, and that's I don't know. That may be a stretch. Like, I guess the definition of like a Ponzi scheme is like the only new money comes from new investors, which is roughly true for stocks. Like, it doesn't come from the company. Like, you give the company actual dollars that they use to operate, and you get a piece of paper that you can just trade to other people, maybe, until the stock goes to zero. And the eventual end of every single stock is zero. Like, you can just trade it to someone else in the meantime. That's just how it works. So yeah, that's stocks. And people like talk about investments and stuff like that. Like, no stock is an investment ever. It just isn't. Like, a stock is always a speculation. You buy it at this price, maybe you can sell it to someone at a higher price. Speculation, that's it. Like, ever. Stocks are always a speculation. Doesn't matter. It's like people are like, oh, in this scenario or that scenario, a stock is a speculation. Like, no. Negative. A stock is a speculation always. There's no value to a stock other than can you sell it to someone else at a higher price. And eventually it goes to zero, and whoever has them at the end is just like loses. So that's kind of how the stock market works. So that sort of fundamental understanding of stock trading and how the companies actually relate to their stocks. Like, stocks used to be actual ownership in the company, like, a long time ago, more than 100 years ago. Like, you were buying a percentage of the company, you owned a percentage of the company, you get profits from the company. Stocks now don't work that way at all. And not only do you not, like, really own a chunk of the company, like, you do have certain rights when you get in certain situations, like if you're going into bankruptcy and something like that. Like, if you own stocks, you can, like, negotiate and stuff like that, but you don't own a chunk of the company the way that people think you do. And then also, companies can just issue new shares. Like, they just print stocks. Companies just print new stocks. Like, they can issue new shares and just sell them on the market. They can issue stock options to employees, which are newly printed shares. They just, like, pay to the employees as, like, salary or something. And then the existing shareholders just lose percentage of, like, whatever they think they own. But, like, you really don't even own anything. Like, you just have a percentage of something you can trade to other people. Yeah, I guess that's it. Like, I guess that was the point of it, but the short squeeze that's on right now is understanding that entire fundamental structure, and also yeah, it's kind of a movement. It's kind of like a counterattack to, like Wall Street taking advantage of the random person, which is a super interesting thing that's going on right now. Is like, okay, like we understand now, we get it. Like stocks are not an investment at all. Like you're just taking money from us, and then it's sort of. I mean, I've heard stocks like referred to as a Ponzi asset a lot recently, which is a topic for a different video. Um, but yeah, I guess all of which I'll cover soon in another video. Like the whole Ponzi aspect of it and the whole short squeeze and like how that like fundamentally works is a different thing. But I think I just wanted to cover in this video the general fundamental of like a stock and people thinking they own something, and like they just kind of own a contract where the company has like no obligation to ever pay them anything ever, and the only place the money comes from is a different person they can sell it to. That's just like the basic fundamentals of stocks forever, for a long time, for like, I don't know, maybe like 80 years or something. Like that's just how stocks have been in like 80 years. I don't know. Yeah. Everything that you hear from like school or like financial education stuff from any kind of college or institution, they teach you that you own a part of the company, and like the the company's business model and their income and profit margins completely affect the stock and stuff like that. Like there's zero correlation between that at all, other than like the only time that ever correlates is if people that are trading the stock back and forth care about those numbers. Like if everyone trading the stock is looking up the profit margins, then it looks like it correlates because people care about it. And then as we've seen the last 2 or 3 years here, where nobody gives like any cares about any of that stuff, like, oh no, now all of a sudden it's disconnected from the fundamentals, like negative. uh those fundamentals have absolutely nothing to do with the stock price, and they never have. The only time that ever correlates is if people care. And if they don't care right now, then it doesn't matter at all. And it doesn't matter at all, as we've seen. But I guess segue maybe into solvency risk here real quick, because it will matter if everyone's holding stocks and companies do start going completely insolvent and disappearing. Like not just kind of bankrupt where they keep existing and they get bailed out, because that, well, if they get bailed out and stocks like never go to zero, then nobody will ever care. But like the only fundamental connection after you have a stock, the only fundamental connection at all that you have with the company at that point is if the company goes, like if they stop existing through whatever, like bankruptcy, like is not immediately like they're gone, but like if they go through the whole bankruptcy process and they actually stop existing, then your stock goes to zero and stops existing. So that is when like a stock market crash would be imminent, as if multiple companies like go away and their stocks go to zero, and then everyone holding whatever they have is like, oh crap, like, oh, I'm holding Tesla, whatever, and it's like $1,000. I just paid $1,000 for this share of Tesla, and it's like, oh, they might go bankrupt in like 2 weeks, and this will be worth zero. Like I think this week, like, nobody even considers that as a real thing. Like you just buy it and trade it and it's awesome and blah 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 or whatever. But like if a few companies go to zero and their stocks go to zero, and the realization that, like, oh, whichever stock you're holding, like, oh, it can go to zero, like right now, like this week, it can go to zero this week. That will dramatically affect the entire stock market. um, I don't know, I mentioned Tesla a couple times just because it's kind of hypey, but there's a lot of other companies that are way bigger risk of kind of disappearing and starting that trend. But I guess on that point, we're talking about the whole short squeeze, and yeah, I mean everybody that's like participating in the short squeeze now is chatting about, the hedge funds involved. There's like 6 hedge funds that have big short exposure. Maybe 1 or 2 of them you know, might lose billions. They might go out of business. Um, so, if this topples like some big financial companies, puts hedge funds, under, if companies disappear and stocks start going to zero on a couple of companies, like it could start kind of a domino effect of everyone realizing, like, okay, like we're trading, these numbers around, but like if the underlying company disappears, like it goes to zero, like real fast. So, I think until that point, like the stocks are, they're just kind of trading between people, and the numbers have nothing to do with the companies. And then when the companies disappear, they start mattering because your stock goes away. It goes to zero. That's really the only correlation, basically, unless the stock's issuing new shares, which they do all the time. But yeah, when they issue new shares, like it just decreases your percentage of the total stock number, like the hypothetical like amount of the company that you own. But like if you own 0.001% of whatever Tesla or whatever, like you're not like voting or controlling the company. Like you own a trivial percentage of the company. You just have a piece of paper that's maybe you can trade to someone else for whatever it is, like $800 this week. Yeah, but if companies really get in trouble and start disappearing, then like all the stocks kind of gets real. Like, oh, it can all go to zero. Anyway, that was, I guess, I don't even know if I that was a lot. That was a bit of rambling. I'm gonna be more targeted in a couple of other videos, but I think that was a decent check-in. I want to definitely take an actual like stock chart analysis of what's going on now, because we've had like 4 months of choppy bull moves, and we just had a candle that is worth a look at today. It's like getting super interesting. Anyway, cheers, and I'll post some more videos shortly. Happy trading.